Well, coming up first, we take a look at the investment case for media and entertainment company Avusa. It earlier reported an 18% increase in headline earnings per share, 149 cents to 176 cents in its financial results for the year ended March 2011. Revenue grew 13% to 5.3 billion rand, while profit from operations was 30% higher at 324 million rand.
Avusa market cap 3 billion, price earnings ratio 13.9 and a dividend yield of 3.5. Craig, I want to come to you first in Cape Town. I got to say the numbers I thought weren't bad, and we can talk and we'll delve into it, old media, etc., etc. Numbers weren't bad, and they do own Sunday Times, which is the biggest paper by some way in this country. It's not a bad asset to have, even if we can say that perhaps newspapers are yesterday's media.
Yeah, look, the numbers don't look bad in isolation, but one needs to look at it in the context of the last 3 or 4 years. They've had declining cash since 2008. 38.4% I think was the figure that they were down in HEPS for March 2010. So you've got to take that into context. But yes, this year has certainly been a lot better. And I think it's that acquisitions also helped quite a lot.
Exactly. Well, let's delve into that acquisition, Travis, because essentially 5 months since the company has been acquired, and we're looking at retail solutions here and adding quite a nice new spectrum overall to Avusa. Are you bullish and confident about the returns we could see for this company?
Yeah, I like the fact that with the I think it was 230 million acquisition on this retail solution business, that their balance sheet still remains strong. Going back to the company in hand, I think it's performed better than they thought it would, so better than expectations, and it's done very, very well in certain divisions.
Yeah.
In the academic book retail sales, it's done well, but I've seen, from what I've read, disappointing in the exclusive books and the general book sales. And in that little space, it's got a lot of competition with the electronic media interface.
Because we're also seeing price deflation, and we're seeing the strong rand,
well,
interestingly also having an impact.
Firstly, you can take the rand and everything away from it. You can go on your iPad or and go order it online overseas for half the price, and you've got the e-book or the electronic version of it, and that seems to be very popular, and that seems to be a space that everybody's getting into.
And it's immediate. I mean, I know with my Kindle, I lie in bed, click, click,
Yeah.
there it is. And that must be the big threat.
And you can take 7 books away with you on holiday on your Kindle.
You can take 7. I must say I like old-fashioned books. I have a library, but that's their big threat. I mean, exclusive books is dominant. New Metro. I mean, we haven't yet. Well, kind of MWeb's kind of offering the DSTV channels online to a degree, but look at what's happening in Europe and the like with companies like Netflix. You've mentioned Amazon, the iPads and the like.
Yeah.
You've got to say that's the future of media. And
my concern is, why go into an acquisition space with this company in mind when you know that is coming? It's done well for them, and they've got good results from it.
Yeah.
But why go into that space if you know there's such competition in that electronic media space?
Well, Craig, let's delve into the aggressive investments, in a sense, that Avusa has made in the digital space, and looking at its online store, exclusives.co.za. That was launched in March last year. We know that it is delving into online games, CDs, books and DVDs, and that's really where the space is going. But unfortunately, we're seeing much lower margins coming through there, and obviously profitability is far lower. Given the fact that they are starting to delve into the space, how can they maximize profitability even on this platform?
Well, look, it's extremely difficult to make money in the digital space, but it's where they have to be. And we look at competition like Naspers. They've made some pretty key investments where they're betting the future will be. So it is a little bit of a gamble. But just coming back to Travis's point about the total acquisition, I just want to correct something. It wasn't 230 million that they paid for it. I think that was the gearing on it.
Yeah.
It was actually 925 million, although in the comments they say 800 million. But you mustn't forget that 125 million was paid as a dividend. So that's flowing through these statements as well. So if you look at it, the company's trying to reinvent themselves continually, right from Johnny Communication days, and I think they split with Element One and Avusa and so on. They really haven't found their feet, and so I think they're looking at the digital space, but I'm not excited about anything they have at the moment.
Yeah, Craig, I agree with you. I mean, exclusives online is nice and the like, and there, but not happening. I mean, they need to almost do a really big bet, a brave bet, a game-changing one. They've got 500 million cash, but big, brave, and game-changing also equals massive risk.
Yeah, absolutely. Look, I mean, the content for the group isn't bad, but they're not finding inventive ways to use that. And it may mean that they're going to have to spend more money finding other acquisitions if the group is going to go anywhere going forward.
So what kind of acquisition then would you like to see, Craig? Would you like to see it in the digital space? Do you think that they should be diversifying further into other elements of the media space? Where is there to hide and go without delving into the digital arena?
Look, I don't have the answers, but
You
I
don't?
think
This is why we got you on the show.
Seen television, they've moved into social media, and some of those investments are working out for them. So I think they've got to be a little bit more inventive.
Yeah, and Travis, that's exactly. They've got to be inventive. As I said, they've got to take some risks that probably spook some shareholders and the like. And your returns might be, and Naspers has taken a lot of bets, and we all talk about Tencent and Mail.ru. There's some which aren't perhaps doing so well. These guys don't maybe have that size of balance sheet to take that giant bet.
That's true, but there's obviously someone interested in it. You know,
well, let's come to that point, and I'm going to try and pronounce it.
Capital Private Equity Group that's looking at it, and you know they're expressing an interest in the buyout and delisting of it. You know, they have put a price on it on around 26 rand. It's currently trading around 24 rand 50. The Public Investment Corporation said that it should be valued at even more than that. Should be valued at 29 rand. So if you look at that, it's looking quite attractive. Taking away everything that's media and all that we discussed, you know, an offer at 29, you would take it if you had the opportunity. Take
20%.
Exactly.
The offer, that sounds fantastic though, but Craig, when you look at what is being implemented at this point in time, Section 45, we know that it's currently under review. We've seen a lot of abuse coming through on this front, and that could actually be the negative within the opportunities that lie ahead in terms of Avusa being acquired.
Yeah, look, I think with Section 45, there'll be quite a bit of breaks in the short term anyway, until things are clarified. It is just a draft at the moment. But what interests me is it's really just a discussion at any rate. There's no concrete offer, to my understanding, on the table, and it's taken a while for the discussion. But yes, there probably is more value in the share price than where it's currently trading at. But it's nothing to get excited about. I think the growth that we're seeing now in these set of results needs to be seen in the context of the struggles that they've had over the last 2 years.
Awful low base, definitely, Craig. On that note, hot or not, Avusa?
No, not hot.
Travis?
I'm going to be lukewarm. I like the play on this the due diligence. I want to see what the outcome of that is, and you know, I don't want to jump in now, but I do like that space and the opportunity going forward. But I am a bit concerned about you know, the background of the business and you know what they have to offer. So lukewarm.
Would you like them to, Simon? Would you like to see Avusa delving into an exotic territory like Russia, Mail.ru and Tencent online gaming?
I would, but I'm not a shareholder. If I were a shareholder, I'd be nervous, and that's my worry with them. I think they've got old assets. They've got to take some bold moves, and those bold moves might not work.
So not hot for you.
No.
Okay. Let's delve into the coal industry now. Coal demand keeps dominating headlines. Investors are increasingly adding coal plays to their portfolios. Now, Coal Junior, Keaton Energy Holdings, posted a profit of 7.2 million rand for the year ending March. Having moved from a coal exploration and development company to a producer, the company's CEO, Paul Miller, believes that Keaton Energy Holdings has made significant strides to becoming a mid-tier coal producer.
We've got a market cap 531 million, small stock, price earnings of 30, no dividend yield yet. Travis, let's come to you. I think we can all agree that coal's hot, it's happening, it's where the globe is powering itself at the moment. That might change in time. To see a mid-tier, a junior miner, they're making some profit. One of the things that really strikes me is that they've got their house in order. We see guys like Coal of Africa who've got issues in terms of their environmental and the water and getting their mining right. We've got Centula, who's had a heck lot of issues. Maybe they've turned the corner. In the small spaces, these guys seem to have got all their ducks in a row. Yeah,
I mean, I looked at it like it in the fact that they've got a couple of big deals. Eskom deal that's going to, you know, it's supplying, I think, 16.5 million
post the number, they're up to 20 million over 10 years.
Yeah, so that's you know, something it's coming to the forefront. Sterkfontein project is something recent. They started end of 2009, and I think in December they're going to start seeing, you know, profits from that. So they've got a lot of good projects going on. They've got, you know, good safety records at a lot of their plants. And I think going forward, like you said, they want to expand from from that explorer developer into that coal producer. And I think, they've got a lot of things on the cards that are working in their favour. So they're looking to be run well, and, taking aside the negatives, there's some good things there.
Well, Craig, let's look at one of the projects that could offer potentially really good scenarios down the line. Leo Mining Exploration, we know that is a recent acquisition, but they still need to get some kind of approvals coming to the fore with regard to the acquisition, because they really need to start focusing on those Newcastle assets. If they do that, then it seems the company could be in very good stead in terms of coal production. Is that a negative, or do you think that they can overcome these other regulations that they need to ensure that they do get going forward?
No, look, the regulations are really not an issue. I mean, they're talking about the Competition Commission approval,
yeah,
and Ministry of Department Environmental Affairs. I don't think those are the issues. The issue for me is where they're going to get the cash from. They're sitting with a net cash outflow of 304 million, 27 million cash on hand. They want to pay, I can't remember the figure, 104 million, 140 million, whatever it was. I think they're going to struggle in terms of finding things. There are some good things going forward, but I think one has to delve a little bit deeper into the figures. What concerns me is that management have really looked like they've enriched themselves at the expense of shareholders. If you look deep down in terms of, there's almost 21 million that's been paid out in terms of fees. I'm not going to go into too much depth there, but also to me the net profit was only the 600,000, not the 7-odd million, because they've accounted for deferred tax in one of their subsidiaries, which really should have been accounted for last year. In my opinion, the accounts should really be represented last year, and so we can have proper comparative figures.
And Craig, you hit the nail on the head. I mean, I remember chatting with Paul Miller back in 2007, and they had a big cash pile, and he said they wouldn't need to come back to market for more money. And short answer is the numbers don't stack up. They've got the Van Gaarfontein, and that's going to start getting some money coming through for them. Thermal coal, Eskom, small margins, not a huge amount there. They're going to either need to go to the banks for a huge loan, or they're going to need to come to market for a rights issue. Neither a very attractive proposition at the moment.
Well, they can try and get a rights issue, but as I say, if people really dig down deep into the financials, that don't look that attractive to me. So you're betting on prospects which also don't look like they're there yet. They need the cash for it. And to me, there's a lot of other coal opportunities that certainly hold more prospects.
Well, I mean, the company says that they do plan, and this is their target, to become a mid-tier coal producer. And we know that they delve into, as Simon mentioned, the Eskom grade coal, and then also the high margin coal. So they've got a nice diversified base, but it seems that they do need to ensure that the funding is in place going forward.
I think they need to look at a bigger exposure offshore compared to other mining houses like the Exxaros, Australian base. There and just, Billitons and the likes, and are competing against a bigger groups. And I think that is going to be the major issue that they're facing, is expansion, not just in South Africa, but big expansion. Like you say, where they're going to get the cash for, or the issues around that. So that is one of my biggest concerns about.
Okay, so Travis, hot or not?
I'm going to say not. My clients tend to look at the Billitons or definitely Exxaros.
Safer plays in a sense.
I wouldn't say safer if you look at the markets today, but just looking at the more diversified, bigger mining houses.
Okay, Craig, hot or not? Keaton Energy.
It's as hot as my Oma's crochet doily. Not hot.
That hot, eh?
To some that could be hot solutions. It's good that you clarified.
The cook sisters are hot, not the crochet doilies.
Simon, hot or not?
I like the idea. I'm worried about the cash. I'm worried about it's not stacking up. Let's give them another year, see how it goes, see how cash flows are looking.